Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below.
Let's start with emerging market growth. In early fourth quarter of this year, emerging market economies experienced accelerated growth, driven by improvements in both the services and manufacturing sectors, particularly following new economic stimulus measures in China. Despite this positive momentum, employment declined for the first time in 6 months. Mild price pressures provided room for potential interest rate cuts, supporting future demand. Global crude steel production in September totaled over 100 million tons, reflecting a 4.7% year-on-year decline, and regional disparities were notable. Asia and Oceania recorded a 5% decrease, with China's output down by 6.1%. In contrast, Turkey and Brazil reported significant growth, increasing by 6.5% and 9.9% respectively. The EU saw a marginal rise of 0.3%, while the Middle East experienced a 23% decline, marking the steepest regional contraction. In 2022, the European Union produced 31.7 trillion euros in goods and services. Nearly half were allocated for intermediate production, and a third for final consumption, and the remainder for investment and exports. Over the years, the share of intermediate consumption has risen, while final consumption has declined. The COVID-19 pandemic notably impacted consumer demand, especially in sectors such as hospitality, leading to sharp decreases in some member states. And going to Turkey, its R&D spending between 2014 and 2023, culminating in a record high in 2023. This milestone highlights the country's commitment to innovation and technological advancement over the past decade. The U.S. manufacturing PMI for October indicated continued contraction, marking the 7th consecutive month of decline. Key factors include reduced new orders, sluggish demand, and persistent economic uncertainty related to interest rates and the upcoming election. Employment and inventory levels remain low, while inflation concerns persisted. Projections suggest that the sector may stabilize by early 2025. Finland's industrial production declined by 1.1% in September compared to the previous month. However, on a year-on-year basis, it recorded a 1% increase. Hong Kong's retail sales in September fell by 6.9% compared to the previous year. Online sales recorded an even sharper decline of 11.8%. Jordan's producer price index recorded a 0.3% decline during the first 9 months of 2024, and indicating moderate downward pressure on producer prices over this period. Asia-Pacific regions are focusing on developing deep and liquid capital markets to enhance growth and resilience. This requires coordinated efforts to improve regulatory frameworks, market infrastructure, and risk management. Strategies include fostering competition, enhancing transparency, and diversifying the investor base to attract long-term investments. Ireland's unemployment rate rose slightly to 4.2% in October, up from 4.1% in September. And youth unemployment reached 10.6%, while the rate for individuals aged 25 to 74 remained stable at 3.2%. The UAE has launched Steer AI, a new venture focused on transforming industrial vehicles into autonomous machines for logistics and defense. The initiative incorporates advanced navigation technologies and emphasizes the United Arab Emirates leadership in the autonomous technology sector. And going back to the UK, the Bank of England reduced its benchmark interest rate to 4.75%, marking the second rate cut in this year. This decision aligns with ongoing process in disinflation and reflects the bank's commitment to managing inflation risks while maintaining restrictive monetary policies. And going to top, Denmark's consumer price inflation accelerated to 1.6% in October, driven primarily by rising electricity costs. And this marks an increase from the previous month, reflecting higher energy prices across the region. The EIB Finance in Africa 2024 report highlights notable growth in Africa's fintech sector, with the number of fintech companies nearly tripling since 2020, significantly improving access to finance. However, high funding costs remain a challenge, hindering the region's climate and digital transitions. African banks are reporting better loan performance for women-led businesses and increasingly adopting gender-responsive strategies. And OECD headline inflation slowed to 4.4% in September, and driven largely by a decline in energy prices, while inflation dropped in 27 of the 38 OECD member countries, and Turkey's inflation remains exceptionally high, exceeding 49%. In contrast, 17 OECD countries reported inflation rates at or below 2%. In the G7, inflation eased to 2.2%, and in the euro area, it dropped to 1.7%, marking the lowest level since June 2021. Italy's retail trade rose by 1.2% in September, with online sales experiencing a notable increase of 2.1%. Austria experienced an 18.1% increase in bankruptcies during the third quarter of this year compared to the same period last year. At the same time, enterprise registrations decreased by 7%, reflecting a challenging economic environment for businesses in the country. The Brand Finance Global City Index 2024 ranked London as the top city brand for the second consecutive year, followed by New York and Paris. Tokyo and Dubai made significant strides, entering the top 5 due to improved reputations. European cities continue to dominate the culture and heritage rankings, holding 17 of the top 20 spots. This study, based on responses from over 15,000 participants, offers valuable insights into global city perceptions and their strategies for attracting talent, investment, and residents. Germany is facing its highest level of order shortages since the 2009 financial crisis, with 41.5% of companies reporting insufficient demand in October. The manufacturing sector, particularly mechanical engineering and metal industries, has been the most affected, alongside challenges in transport and event services. Despite an increase in order backlogs, the pace of recovery remains sluggish. In 2023, 17.1% of EU employees worked part-time, a slight increase from the previous year. Women, especially mothers aged 25 to 54, represented the majority. with 31.8% working part-time compared to a much lower rate for men. The disparity was particularly pronounced in Austria, Germany, and the Netherlands. Romania stands out as the only EU country where part-time employment is higher among men than women. And lastly, business owners in the Netherlands anticipate increased staffing and higher investments in 2025 despite labor shortages and negative business confidence. Labor shortages cited by 38 of entrepreneurs remain a primary concern, particularly in transportation, car trade, and business services.
Thank you for watching and remember to subscribe to our channel for the latest updates.